Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:13 a.m. Central Time, and I'm recording this in preparation for the market day, June the 3rd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's see what happened with the overnight. Moderately bullish. All four broad market indices are up a little bit, but only slightly. You've got the ES, or the S&P futures contract, up about 5 points. The Russell's essentially scratch. The Dow is just a little bit better than scratch, and then NASDAQ is up about 1/3%. Crude oil, after having a big move yesterday, another big move last night, down 2%. You had the euro down about 0.42%. You have the bonds essentially scratch, and then gold down about 0.5%. After a couple big moving days in China, it is scratch. Hong Kong up about 0.69%. Japan down about 1/3%. Germany up about 0.5%. United Kingdom essentially scratch. In terms of macroeconomic reports for today, you have non-farm employment change, ADP version. You have trade balance. And you have non-manufacturing PMI, and that one will come out during the market. And then you have crude oil inventory at its usual time and usual date, again back to Wednesday at 9:30 Central. That should take care of it for the highlights for today in the US. In terms of tomorrow, you have the weekly unemployment claims, and that's about it. Now, let's see, natural gas storage. You do have one FOMC member speaking during market hours, so that's always possible to move things around. You just can't ever tell. In terms of current market conditions from a volatility standpoint, yesterday was largely a non-event day. We've had kind of back-to-back days where no real indication of direction of the market was given. Short-term VIX just under a 14. Skew you see is below 125. Nothing terribly alarming there. IV percentiles 25, 14, 25, 38. Nothing really unusual there. In terms of standard deviation moves, no market put in a greater than 1 standard deviation move yesterday of the four broad market indices, and you see things have been relatively quiet really in the last couple weeks, with only 2 sessions of greater than a 1 standard deviation move being put in by the S&P. So pretty quiet action here of late. In terms of our regular daily report, not a lot of new changes here today. We're still phase 3, looking for higher highs and higher lows. We still have an IBD status, a confirmed uptrend, GMI index 6 out of 6. There are some warnings. Obviously, the market posture is, we probably should just call this neutral. It actually flipped over to bullish yesterday by the smallest of margins on the S&P, and I still left this as no new short-term or intermediate term. Really, I could just call this whole thing neutral. We really have no good direction being indicated by this indicator at this point. You see the Dow was also bearish, Russell's bearish, NASDAQ remained bullish. It really is just a flat-out mess in terms of these indicators at this point. We are, as a result of these kind of mixed signals of the market, still at a 0+ normal with cautionary aspects. We still have several volatility-based warnings on tap. Market in decline and sharp increase warning have both flagged. We still have that VIX daily squeeze, and we still have 3 of the 5 intermarket risk aversion indicators flagging as risk off. Though some of these are starting to potentially change their course. But the bottom line to it is that we just have not an awful lot of clear insight as to the direction of this market. If you were to say which happens first, S&P up 50 points or down 50 points, that would be really, really difficult to get with any kind of confidence at all. So you should kind of keep that in mind as we go forward. Option income strategies, these may be some of the best strategies right now. VIX is inside the acceptable window. If we remain range bound, remain sideways, these can certainly pay well in relative terms compared to directional trades that have lack of follow-through, it would seem. Now you got to consider that potential for increased volatility. That certainly could rear its head at any moment, and I myself have been very suspect of this market, just feeling that a significant down move is close at hand, but just no real evidence to get too highly lined up with that side for sure. It's just a number of these things. If you look at the charts, obviously this may be perhaps the best way to tell is, these breakouts just seem to fail right away over and over again. Indeed, if we go back to the beginning of the range, up to the top, pull back, top of the range, failure, 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 break out of the range, and then as soon as we get to everybody coming back from the holiday, failure, back into the range. So it's very, very difficult to be very confident in this market right now. When we look at the expected leaders, small caps, clearly not leaders. NASDAQ, better than Russell, but clearly not a leader. Dow Jones, obviously problems. Transportations, clearly in a downtrend and certainly not conducive to bull markets. And then you got this craziness that's going on in bonds, and is this the next leg down for a continued breakdown in the 30-year bond, or is this finding support and about to rip up and be a safe harbor again if the market turns down in a big way? So a lot of cross currents coming through all these things right now. If you look at the sectors, they're just a mess. And let's see here. Let's go here. Go ahead and take a look at the sectors. I mean, we've seen this from earlier in the week. I mean, there's nothing there heartening about the sectors. In terms of yesterday's market postures on the 3 different time frames, on the short term, when you look at this, I mean, there's one green in that entire column. And indeed, only one sector is green across all 3 time frames, consumer discretionary. Certainly not what you look for to be the sector that leads the bulls in big, strong bull markets. And then if you look down at the percent change, pretty modest day on both sides. Obviously, utilities got hurt pretty bad. Other than that, everything's within plus or minus 0.5%. But there's not a lot of consistency across time frames other than financials can go back for multiple time frames and hold up, as can consumer discretionary. And I guess consumer discretionary was the one that held up best in these models from yesterday in the short, intermediate, and long market posture. So it's not an easy market from that aspect, so just kind of keep that in mind. I think that should probably be enough for today. As always, if you find what we're doing here helpful, especially when the market's actually doing something of significance, we appreciate your liking us on YouTube and other social media platforms. We're there. Obviously, we welcome your support in terms of feedback, direct feedback and comments, and that may be sent to this email at support@falconglobaltraders.com. And then, of course, more information about how we actually apply all this live into our trading. can be found at this website address. Performance matters. We're quite transparent. This is based on our modeled size. Obviously, you can scale up or scale down to your appropriate situation. Disclaimers as always. Hit the pause button if you need more time to review this. And we'll look forward to seeing you back here tomorrow morning before the market opens.